GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth. He's the author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show.
Nice to be talking to you again.
Prime Minister Trudeau's cabinet decision to approve the Kinder Morgan doubling of the pipeline from Edmonton to the Vancouver area, greeted in Vancouver with protests, but in Alberta, I bet you they have a whole different attitude towards it.
You know, they do. I think the desperate thing about northern Alberta, where literally hundreds of billions of dollars have been invested in new plants to produce synthetic crude and bitumen. They need to get it to the market, and of course, if you go back a little ways, the Keystone Pipeline was going to be an important outlet, but it got canceled. Now there is a chance with the change in government down in the U.S. that maybe it'll get approved eventually, but just one pipeline alone isn't going to be enough. So the doubling, the twinning of the Trans Mountain, which I understand actually involves maybe a tripling of the throughput, is a really good news for Alberta. And of course, I think there's 157 conditions that have been put on it. But it is a problem for Vancouver in terms of the increased tanker traffic that will go underneath the Lionsgate Bridge. However, it is a really big boost for our exports, because one of the problems that Canada is an exporting nation, and we've been running a deficit in our exports, total balance payments for a number of years now. We're not supposed to be running a deficit. We're supposed to be running a surplus. So we're actually having to borrow money from the world in order to meet our commitments. And so we need to sell more exports. And, with the demise of BlackBerry and a few other things like that, our best chance is probably in the energy sector. And the nice thing about the Trans Mountain Kinder Morgan is that the right-of-way is already in place. So it's not an expansion of the impact of it between Edmonton and the coast. It's just the increased tanker traffic going out of the harbor. But I can also understand that people won't be that happy about that, but sometimes these things are necessary, I guess.
Yes, and they will have to go through a wilderness preserve in Burnaby to expand the pipeline. And during protests there last year, they arrested over 100 people, and then afterwards found out that Kinder Morgan had given the wrong coordinates to the RCMP, and where the protests were taking place was actually public land that they were allowed to be legally.
Oh, really?
So Kinder Morgan didn't make any friends there.
No, and I think, that's an American company, and I don't know how it works down in the United. I know they have in Dakota right now, North Dakota or South Dakota, they have protests against pipeline there too. So it seems to be a North American thing, if not a worldwide thing. And but the problem is that the alternative is either don't ship the oil at all, which literally would be disastrous for the Canadian economy. It's not just the Alberta economy; it would be the Canadian economy. But also so of course they would find a way to ship it, and the most likely way they would find is by rail car. Well, in my mind, and I think a lot of other commentators have said this too, that rail is way more expensive. So rail is basically triple the cost. The rough guidelines, every situation is different, but $5 a barrel on pipeline and $15 a barrel on rail. So really, if you have to ship it by rail, the economics don't work that well, especially given that northern Alberta oil is already more expensive than a lot of other oil. But secondly, the environmental impact of shipping by rail. So the railways, the CPR goes through the Rogers Pass, and a spill there would be very devastating. The railways follow the river, basically, both railways, both the CN and the CP, to the west coast. So any kind of a spill, and a railway spill is inevitable, probably, if you ship enough oil by rail. So if it's between those two alternatives, pipe makes a lot more sense. Now, I think the protesters are saying, just don't ship it at all. They're not arguing between rail and pipe. They're arguing ship or don't ship at all.
But of course, the railways are already there. Years ago, near Squamish, they had a spill. Some railway cars went into the river there containing caustic soda, and they wiped out the trout for 20 years.
Yeah, I know. It's a very, I mean, there's a lot of problems with rail. One of the other problems with rail is it comes to the railway by truck or by some other means, and then it's got to be transported from truck to rail, and then at the other end it's got to be offloaded again, and that's a dangerous time as well. Whereas with the pipeline, the nice thing about it is it goes directly can go directly onto the ship or into storage tankers, and there's a lot of stuff that ships to Vancouver. There's
that big giant pile of sulfur right there on the other end of Lionsgate Bridge.
And some of that comes from Alberta, and it's it's toxic depending on what you mix it with, I guess. But it's been doing that for decades, and seems to it gives a nice yellow color to the if you look across from Cole Harbour, you can see all the piles of yellow.
And I'm just worried one random spark could send the whole thing up, and what a unpleasant experience that would be. Also, it should be noted that West Coast tankers are all double-hulled, and so far, since they've been double-hulling ships since the Exxon Valdez disaster, they've never had a major oil spill involving one of those tankers.
Yeah, I think that's right, and but the other thing, apart from Trans Mountain and Kinder Morgan, is the risk to the Alberta oil and Saskatchewan oil in terms of the shale oil. And I think we've talked about it before. The shale oil revolution in the U.S. is just amazing. There's a new find in the Permian Basin, which they're talking 3.5 billion barrels. And I was just reading today an article, and I have no idea how accurate these numbers are, but it seemed like a reputable source saying that they might be able to get the cost down to $30 a barrel in some. There's different shales, so there's all kinds of different shales with all kinds of different.
Is that in Texas?
Yes, so at the Permian Basin, where the new discovery is and where the economics are so good, is on the west border of Texas. I think the neighboring state is New Mexico, so it's right close to the border between Texas and New Mexico, and the dynamics there are excellent. The costs are much lower. I mean, the average wages are much lower. The proximity to tidewater is much better. It's a very short shipment to get it to ocean, and the $30 cost of producing it is way better. The other thing that's way better is it takes only about 28 days to drill one of those shale oil wells. On the other hand, when you go look at the oil sands from when you first start building the plant to when you get the first drop of oil or bitumen out, it can be as long as 7 years. So if you're worried, and I think people are worried in the oil industry now about the possibility that 10 or 15 years from now, people will have switched to solar or electric or something like that, and the demand might not be there. You want to get your oil produced out of the ground and sold right away, and then you don't have that risk. So the shale is a lot better deal for the people that are investing money. And there's another thing with shale, which is more of a short-term thing, but it's a big factor right now, and that is there's a whole bunch of wells that were drilled back when oil was $100 a barrel, and they didn't actually put them into production. They're called DUC, or drilled but uncompleted, and for a small amount of money, they can finish the well, which basically means putting the production equipment on top of it, small investment in dollars, and there's a bunch of oil that's already been discovered, but just hasn't been shipped yet. And so as soon as the oil picks its, and today it did stick its nose up to the last number here is $48.98, and so anywhere around this price, a lot of shale oil is out of the U.S. is going to get perked up. 10 years ago they were producing 5 million barrels. At the peak, they got up close to 10 million barrels a day, and now they're down just under 9 million barrels. But they could easily ramp that back up to 9.5 or even 10 million barrels if the price is right.
Well, OPEC announced that they have agreed to cut production by 1.2 million barrels a day, and that other non-OPEC nations are on side with that. How do you get non-members to go along?
Well, I don't know. It's a good question. I read the announcement, and they even put together a detailed table of the cuts by country. And so really the cuts are primarily 600,000 from non-OPEC producers, of which it looks like half is maybe Russia. And then within the OPEC producers, the only large cuts are with Saudi Arabia at about 400 and something thousand barrels. So between the non-OPEC producers of 600 and Saudi Arabia of 480 or something like that, it's almost the full 1.2 million barrels. And we know, anybody that's been following this knows that these announcements often are immediately followed by cheating. The actual implementation of this starts in January, and I don't know how ironclad the agreement is with the non-OPEC producers. The U.S. is not involved. It's one of the bigger. The U.S. I just mentioned was around 9 million barrels. So the Saudis are talking about cutting back by 500,000 barrels, maybe back to 10.5 or 10 even. So the U.S. is a big swing factor here, and if Russia and Saudi Arabia want to cut back, which will allow the oil price to go up to $50 a barrel, and that means the shale guys in West Texas can pump out a whole bunch more oil, I guess they should send them a Christmas card or something. But I really don't know how it benefits Saudi Arabia and Russia to do that. And so put me down in this column of skeptical about this agreement. I don't see that. If all they are accomplishing is to cut back their own production so a bunch of other people can sell more oil, including Alberta and the U.S., it doesn't really make any economic sense for them to do that. And I think what they really wanted, because they'd had so many failed meetings, what they really wanted was some kind of an agreement so they could say that OPEC still exists and still is a viable operation. But I really don't think the cartel is working anymore, and I'd be surprised if it lasts much longer.
We'll have more with Hilliard MacBeth right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, Alberta Premier Rachel Notley says that the companies that produce the oil from the sands have all agreed to meet her carbon targets. So really, this won't be increasing the world's carbon footprint when they export it. Is that something that should ease the minds of environmentalists?
Well, it's a big. There's a lot of angles to it, of course, and one of the big things with the Alberta introduction of a tax. Now it's a little bit different from the BC's carbon tax, but it's in the form of a tax more similar to British Columbia's carbon tax. In Ontario they have something called cap and trade, which is different again. But one of the things about a tax, and it was in the paper that they released the time when Alberta introduced their tax, was the fact that if you do it, but then nobody else does it, have you really accomplished anything? And that is the problem. So if they ship the oil to a bunch of countries that have agreed to also introduce a carbon tax, then overall I think you could argue that it was not adding at all to the to the overall carbon footprint of the world. So it depends on who you ship it to. But one of the things that's changed a lot in the last, well, there's two things that have changed a lot in the last 6 months, and one on the positive side, one on the negative side. So one of the positive one is China is getting very serious about greenhouse gas emissions. At least they're saying they are, and so that helps a lot, because without China, I mean, what would be the point of Canada doing anything at all? China is being so much bigger. So that's a positive for people that are arguing for curtailing greenhouse gas emissions. But the negative is Donald Trump. So President-elect Trump is talking about completely doing away with the Environmental Protection Agency and tearing up the Paris Accord and tearing up other agreements as well. So I don't know if he's serious about that. Nobody knows, I guess. But of course, what the Americans do matters a lot. They consume 18 million barrels of oil a day and a bunch of coal. And one of the things he did when he tried to win those swing states, which he did in the end beat Hillary Clinton, is he appealed directly to the coal producers and said, I'll save your jobs. And so I don't know what's going to happen, but certainly what happens with Canadian pipelines and Canadian production is pretty small potatoes compared to what happens with China and the U.S.
Hilliard, switching over to real estate, what's the market like in Alberta right now?
Well, it continues to be very difficult at the expensive end of the market, in like the $1 million and up, but it's surprisingly resilient in the mid-range, say the 300 to 600,000. I mean, I don't follow it super closely. It's not part of my day job, but I do watch, and there seems to still be a number of optimistic people that are buying houses at the more affordable end of the spectrum. But the one big change in it, I mean, almost daily you notice evidence of it, is the number of properties for rent. So the advertisements, I'm sure on behalf of landlords that are desperate to rent their properties, just keep piling up and piling up. So it's a renter's paradise here. That 2-bedroom that used to be $1,500 a month is now, I'm sure, can be found for $1,000 a month, and plus some incentives as well. So probably the actual rent would be well under $1,000 a month, and pretty hard to buy any house at all anywhere that costs you as little as $1,000 a month. So it's that renting has always been a bit cheaper than owning in the housing boom that we've had. But that's become even more pronounced. There also are a lot of purpose-built rentals in Alberta and in Vancouver too, as well, I understand, and Toronto, that are being built right now. There's a tremendously large number of apartment buildings built, not as condos, but as designed for rent. And one of the reasons for that, I understand, is that the CMHC financing is available, and it's becoming more difficult with condos, so that people are switching over to rentals. But the thing with that, though, is the more that rents come down and the more availability there is, then the more pressure it will put downwards on house prices. So what seems to be the case with housing in Alberta is that the people that still have a little bit of money, there's a lot of people who got a package from their job that have been laid off, are still pretty optimistic, and they're willing to buy houses, even though they don't necessarily have a great future at their employment. And I'm sure that'll change fairly soon. The anecdotally, and there's no way to check this, but anecdotally, you hear from lots of different people that the packages that were given a year or two ago are starting to run out, and of course the employment insurance payments run out after a period of time as well. So.
But they say there's going to be 15,000 jobs building that doubling of the pipeline by Kinder Morgan, the Trans Mountain line. Maybe a lot of people are expecting to find jobs there for at least 4 or 5 years.
Well, I mean, that's one of the reasons why people that are working in those fields would be wise to rent rather than buy, because, I mean, if you're going to work for a couple of years on a pipeline expansion, you might be better off just to find a rental closer to to where you're working in BC rather than. But if you own a home that you can't sell, then I guess maybe you have to stay behind. The Canada's sort of got a history of projects, big projects, Trans-Canada Pipeline and different ones like that, and people that are willing to move for a job generally do quite a bit better than people that stay stuck in one place, especially if you're in Alberta.
Well, I believe Canadians move the most out of any one of the industrialized nations. We are a nation of movers. I
think so, and it's that's one of the things that we learned about the global financial crisis and the U.S. housing crash was that the people that had bought houses, there were a tremendous number of low and middle income people that had bought houses, and they were stuck because their mortgage was bigger than their house, and they weren't able to move to where the jobs were, and that really hurt the economic productivity in the U.S. So it's a challenge, it's a big challenge. But the other thing that I don't think people don't realize in Alberta is it isn't just oil and gas. There's 250,000 people employed in construction in Alberta, and that's not just residential, but that's commercial and oil sands and everything. And that's up from about 150,000 10 years ago. And so the peak was 275,000, so it's only come down 25,000. Already the unemployment rate is hitting close to 10% in Alberta. It's much worse than any of the recent recessions. So there's probably another 100,000 jobs that could come out of the construction industry in Alberta, and they have to go somewhere. So if you've got a construction project in BC, there'll be lots of people looking for jobs in that segment. But 100,000 jobs in Alberta it's like 3 or 4% additional unemployed if they were all to lose their jobs. So hopefully somebody finds something for them to do, because I don't think they're really, I don't know, but most construction workers probably are not easily retrained to become computer programmers or something like that. I'm sure there's a few of them are, but they tend to be kind of fixed in that job, where you're outdoors and you're kind of working independently, and there isn't a boss watching over your shoulder every minute of the day, that sort of thing. So it's going to be a challenge. Some of them will have to emigrate to the United States and work under one of the Donald Trump infrastructure plans. I don't know.
Hilliard, thank you so much for chatting with us.
Nice to talk to you again, Jim.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. On YouTube, we're Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.